We know housing is expensive, but prices in Australia are now rising at their fastest rate in 4 years.
In the 3 months to the end of November, the fastest price growth has been seen in mid-range homes.
With the interest rates, first-home buyers are really keen to enter the market with some new schemes and that sort of thing. And investors are definitely looking to buy in Melbourne.
I want Victoria to be the townhouse capital of Australia.
The Allan government fast-tracking permit approvals for townhouses up to 3 stories high.
Here's what Victorian Premier Jacinta Allan doesn't want you to know. Melbourne's median house price has just hit $1.083 million, and it's heading straight past the $1.1 million mark within weeks. That's not a typo. The median Melbourne family home now costs over $1 million. And here's where it gets absolutely cooked. This price surge represents the strongest quarterly growth in nearly 4 years, putting Melbourne just 0.9% below its all-time record high from December 2021.
Well, Australian house prices are rising at their fastest rate in nearly 4 years, according to a new report.
While the Premier announces planning reforms that experts say won't help for years, Melbourne families who bought at the peak are watching their mortgage repayments destroy their budgets. In suburbs like Berwick and Warren, 100% of households are now in mortgage stress. That's right, every single mortgage holder in these suburbs is spending more than 30% of their income just to keep a roof over their heads.
70% of their income is now going towards their mortgages.
I am pretty stressed. I try not to think about it because, I don't know.
In this video, I'm breaking down the exact numbers the government is hiding, why Premier Allan is reportedly panicking behind closed doors, and which Melbourne suburbs are about to get absolutely hammered. Let's start with the valuation crisis, because understanding how we got to $1.1 million is critical to understanding why the Premier is freaking out. Melbourne house prices jumped 2.2% in the September quarter alone. That's roughly $23,000 in value gained in just 90 days. This surge marks the 4th consecutive quarter of growth, the longest stretch of uninterrupted appreciation since the peak of the pandemic boom in 2021. Now, PropTrack's methodology pegs the median house value slightly lower at $1.012 million as of December 2025. But both data sets confirm the same brutal reality. Melbourne is officially a 7-figure city.
So many people bidding and a lot of investors, so yeah, we know that there's a lot of competition.
We're selling, and we're sold.
The house sold for more than $1.1 million.
For existing asset holders, this market has delivered a wealth windfall of approximately $63,000 over the year. But for aspirants trying to break into the market, the goalposts have moved by an amount exceeding the average annual post-tax savings of a dual-income household. Here's where the political crisis intensifies. For the first time on record, Brisbane has overtaken Melbourne to become Australia's 2nd most expensive capital city. While this might ostensibly suggest Melbourne is becoming more affordable, in the political arena it's being framed as a failure of economic dynamism compared to the northern states. The narrative has shifted from Melbourne being the most livable city to a city where the cost of living is high, but asset appreciation lags behind boom states like Queensland and Western Australia. But here's the truly brutal part of this story. The price gap between houses and units has widened to 83%.
The national house premium has hit a record $363,000, almost 50% more than the average unit price.
Melbourne houses now cost $1.083 million compared to units at just $590,597. This near-record disparity reflects a structural shift in buyer preference towards land banking and the scarcity of detached dwellings in inner-ring suburbs. Melbourne families now face a stark choice. Accept a lifetime of apartment living in a sector plagued by concerns over build quality and body corporate fees, or migrate to the extreme urban fringe to afford a detached home. This forced choice is the primary driver of the political dissatisfaction fueling the Premier's panic.
Finding a home is getting increasingly bleak.
It's just really difficult. It's an intense competition.
Now, the cruelest irony in this crisis is what's happening in Melbourne's Battle of Burbs. Analysis of traditional working-class suburbs reveals that government interventions designed to help first home buyers have actually stimulated demand in the $900,000 bracket, driving prices up faster than in premium markets.
Get ready for property prices to rise even higher. From October, the federal government's expanded home guarantee scheme will be open to all first home buyers and allow them to purchase even more expensive properties with just a 5% deposit.
5% deposit scheme are very likely to outpace the rest of the market for home price growth.
Suburbs like Frankston North, Coolaroo and Dallas have recorded annual value growth of up to 20%. Frankston North saw its median value surge by $112,000 to reach $689,000. In Melton, the median rose by nearly $80,000. For a low-income household in these areas, a $100,000 price hike effectively destroys their borrowing capacity, as their wages haven't risen by a commensurate 20%. This creates a political emergency. The government's own support policies are inflating the entry-level market, effectively cannibalising the subsidy.
Whereas usually this time of year, the 5-year average would be $150,000. So rising demand against tight supply is continuing to see a rise in home values.
Meanwhile, at the other end of the spectrum, the prestige market has completely decoupled from the general economy. Suburbs like Deep Dean saw median values explode by $602,000 in a single year to reach $3.61 million. This creates a visual and social disparity that fuels class resentment. While the Premier discusses the dignity of a roof, the market is allocating resources to luxury upgrades in the inner east, where equity-rich boomers and high-income professionals are insulated from the interest rate pain crushing the outer suburbs. So here's where Premier Allan's response gets interesting, because the term panic isn't journalistic hyperbole. The centrepiece of the government's strategy is the housing statement and the designation of 50 activity centres around train and tram hubs. In these zones, the state government is effectively stripping planning authority from local councils, a move interpreted as a direct declaration of war on NIMBY sentiment.
More than half an hour into a heated media conference on the suburban rail loop, Jacinta Allan called time.
Well, all right. No, I've finished on the SRL. No, I'm done on the... No, we're done. I've got to screw up.
Peppered with questions, the Premier tried to flip the script.
It's not only Australia's largest public transport project, it's Australia's largest housing project.
The policy is geographically targeted. Unlike previous growth strategies that focused on Western sprawl, this plan targets the affluent Liberal-held seats of the inner east and southeast, Brighton, Toorak, Malvern and Armidale. By rezoning these areas for high-density towers up to 20 stories in station cores, the Premier is arguably engaging in a form of class warfare, framing residents of these suburbs as blockers who are denying young Victorians the dignity of a home. In press conferences, Premier Allan has explicitly stated that her government will not be lectured to by people who already have the benefit of a home. This soundbite, widely circulated on social media, serves a dual purpose. It rallies the renter base of millennials and Gen Z while attempting to delegitimise opposition from resident groups in wealthy suburbs. The government has reportedly been privately pleased by the protests in Brighton led by Liberal MP James Newbury, as these visuals reinforce the Labor narrative. A progressive government fighting for youth against an entrenched wealthy elite protecting their views.
I understand what people might think, the Brighton bubble and, people from Brighton, who cares? But like I said, this issue, it's not just this issue, it's a bigger issue.
I worked 7 days a week for 4 years to save up for my home. I've lived in my house for 45 years. I bought it when I was a single female and they didn't want to give home loans to single girls.
But here's the problem with this strategy. It doesn't actually build houses. It creates political theatre while the crisis deepens. Beyond the headlines, the government is wielding legislative hammers to smash through red tape. The introduction of a townhouse code aims to reduce approval times for medium-density developments from months to as little as 10 days. By eliminating third-party appeal rights at VKT for compliant developments, the government is effectively silencing the primary mechanism residents use to stop development. This is a profound shift in Victorian planning law, prioritising the speed of supply over the rights of existing residents to object. Right? So while the purchase market is becoming a fortress for the wealthy, the rental market is experiencing what can only be described as a catastrophe. This is where the Premier's freakout becomes truly justified from a political survival perspective, because rental vacancy rates have collapsed to crisis levels. Melbourne's rental vacancy rate currently sits between 1.1 and 2.2%, depending on the suburb.
In Australia, the percentage of house rentals that are vacant right now is sitting at 2%, 30,000 properties, a bit lower for units at 1.4%.
Anything below 2% is considered a rental emergency. At one point, 1% in some areas, Melbourne is experiencing the most severe rental crisis in recorded history. But here's what makes this Victoria-specific rather than a national trend. Perth and Brisbane also have low vacancy rates, but they're driven by supply constraints where construction literally cannot keep pace with demand. Victoria has a policy-induced supply destruction. A critical failing of the current administration identified by property experts is the unintended consequence of fiscal policies designed to service the state's massive big bill debt. The government expanded land taxes and introduced a COVID debt levy. Data indicates there are over 10,000 fewer active rental bonds in Victoria compared to the previous year. Investors, facing higher holding costs and vilification in public discourse, are selling up, often to owner-occupiers, which reduces the total pool of rental stock. According to property strategist Michael Yardney, this war on landlords has resulted in a self-inflicted supply shock. While the government claims these policies will force landlords to provide better housing standards, the reality is they're simply driving investors out of Victoria entirely.
Property investors are fleeing Victoria, leaving fewer rentals on the market.
The social impact of this policy failure is visible in viral content emerging from Melbourne. TikTok channels document queues of hundreds of people for single rental inspections, creating a visual narrative of systemic failure. The narrative has shifted from housing stress to housing survival, with families making impossible choices between rental bidding wars and potential homelessness. But here's where expert opinion diverges on whether the Premier's panic strategy will actually work. Economists like Brendan Coates of the Grattan Institute laud the zoning reforms as a revolution, but warn of the paper supply trap. Rezoning land allows for more homes in theory, but it doesn't build them. The construction sector is currently plagued by insolvencies, high material costs, and labour shortages, partly caused by the government's own infrastructure projects competing for trades. Confidence in the Victorian property sector has hit record lows, meaning that even with permission to build 20 stories, developers may not find it financially viable to do so. Michael Yardney argues the government's approach is fundamentally flawed because it ignores the investor equation. He posits that 2026 will see a bifurcated market where investment-grade suburbs in the inner ring with amenities will outperform due to scarcity, while secondary locations languish. He warns that without incentives for private capital, the rental crisis will deepen as the government cannot fund social housing at the scale required to replace fleeing private landlords.
More than 1,000 homes have been removed from Melbourne's rental market as rising costs force landlords to sell up. Now that's leaving renters with nowhere to go as the vacancy rate reaches an all-time low.
Meanwhile, Economist Stephen Koukoulas offers a more contrarian view, arguing the market has stabilised and that affordability destruction is a temporary phase that will be alleviated by rising wages and eventual rate cuts. Now, the digital landscape offers raw, unfiltered insight into this crisis that traditional media often sanitises. Channels focused on Australia's housing crisis use sensationalist framing with headlines like "breaks records" and "housing crisis" to drive engagement. These videos frequently feature clips of the Premier being heckled or looking stressed, reinforcing the narrative that the government has lost control. The comment sections become hotbeds of anti-immigration sentiment and anger at the political class. Meanwhile, on platforms like Reddit, the sentiment is more nuanced. While there's anger at the government, there's also strong support for the YIMBY reforms. Users frequently mock the NIMBY tears of Brighton residents, viewing the upzoning of wealthy suburbs as a form of poetic justice. This suggests the Premier's class war strategy may be resonating with her target demographic, even if the economic results are yet to materialise. So where does this all lead? In the best-case scenario, the aggressive upzoning and planning centralisation begins to unlock supply within 2 to 3 years. Construction costs stabilise or even decline as commodity prices normalise. Interest rates fall by 1% or more, improving borrowing capacity. The 50 activity centres start delivering medium-density housing in amenity-rich locations, creating that missing middle that Melbourne desperately needs. Under this scenario, Melbourne's median price stabilises around $1.2 million by 2030, growing slower than inflation, which represents real affordability improvement even if nominal prices stay high. The rental crisis eases as institutional build-to-rent projects are incentivised and mum and dad investors cautiously return to a more balanced regulatory environment. But in the realistic case, which most analysts consider more probable, current policies continue producing minimal new supply for the next 2 years because developers remain cautious and financially constrained. Prices drift another 5 to 10% higher through 2025 and 2026 as population growth continues to outpace new dwelling completions. The median pushes toward $1.15 to $1.2 million. The rental crisis persists, with vacancy rates staying below 1.5%. Rents increase another 10 to 15%, pushing median asking rents for houses above $800 per week in outer suburbs. Political pressure forces some land tax reform before the 2026 state election, but it's too late to reverse the investor exodus that's already occurred. Victoria's rental market remains structurally broken for a decade. The worst-case scenario involves construction sector collapse, spreading beyond small builders to mid-tier developers. Major residential projects stall or are abandoned. No new supply enters the market for 3 to 4 years. Investors continue exiting en masse, removing another 15 to 20,000 properties from rental supply. Vacancy rates hit 0.8% or lower. Rents become genuinely unaffordable for median income earners, with typical households spending 50% or more of income on housing. The social housing waiting list explodes beyond current capacity to manage. Political crisis leads to calls for an early election as the Premier's approval ratings collapse under the weight of a crisis that policy interventions failed to solve. Here's the truth. Melbourne's median house price has crashed through $1.1 million during a cost of living crisis, destroying the social contract that said hard work and home ownership go together. Premier Jacinta Allan's response, a shock and awe campaign of upzoning and planning centralisation, is a high-stakes gamble. For someone who's trying to understand this crisis, the story is one of conflict. The conflict between government and councils, the conflict between millennials and boomers, the conflict between the economic reality of $1.1 million homes and the political necessity of affordability. This is the defining political narrative of 2025 and 2026 in Victoria. I'll be covering Melbourne's housing crisis every week, tracking the median price movements, analysing every policy announcement, and holding the government accountable for promises made versus results delivered. Subscribe to Aussie Explained so you don't miss the next video. Thanks for watching. See you in the next one.